everyone. Welcome to our fifth webinar for the month of May. I believe that every eye are on our political dilemma today. What could happen and what is the most likely scenario to be happen today? And let's find out together. Before that, let's start with the speaker bio first as usual. There are two speakers today. Mr. Danai Turayapisit. He has been a capital market analyst for Philips Securities Thailand since 2002. Currently, he holds the position of Vice President for Equity Research. He spent more than 12 years covering property development and building material sectors. Besides being an MBA graduate from Western Michigan University, he holds a MS in Finance from Golden Gate University. He also earned designation as a chartered financial analyst in 2012. The second speaker, Ms. Thirada Chanyingyong. She has been an equity strategist for Philips Securities Thailand since 2004, employing in a top-down investment approach to look for appropriate investment themes at the right times and updating the both institutional and individual investor about the outlook for Thai stock market. She holds a MBA from Chulalongkorn University, Thailand. So for the month of May, we think there are three major factors to influence the markets. For sure, the most important one will be awaited on the political developments, which will have give you more detail later. The second factors would be the foreign fund inflow. Actually, it continues into Asia for a while, but for Thailand, the movement would mix as the political uncertainty still overshadow the market. And the last factors that will influence the market would be the earnings seasons. Actually, it is likely to lend some support to the markets on the downside. For the domestic political wildcards is likely to dictate the trend on the Thai stock market in the month of May. And as said, the good support for the market would be the first quarter earning plays. For the month of May, we expect to see this support level for set index around 1370 point, and the resistance would be around 1450s. Let's see the details about the most important factor for the market. It would be the possible political scenario, what would happen recently and next. There are three scenarios, the base case, and worst case. Start with the base case first. For sure, it would be the case that the new election can be held as soon as possible without violence. But unfortunately, we see very slim chance for the base case, as at the moment the election commission and the government still have some different view in some details. So we still have no royal decree to call for a new election yet, despite although the election commission and the government agree to have the new election, to set the new election date on the July 20th, but the royal decree still have not yet to be submitted. But if the best case happens, the strong rebound for the market towards 1500 point is expected, as the foreign fund flow will return heavily after the political crisis is solved in a democratic way. And the base case would be the failure to reach a compromise between both conflicting sides. That means uncertainty remains. The market is expected to be trapped in a sideways trading range with the upside swing limited to 1440s. And the longer the political uncertainty continues, the higher the risk of GDP or sovereign credit rating downgrades will be. And the downside target is seen as 1340 to 1320 points. The last case is the worst case the case that we hope to not see it, but it would be the violent occur as a result of clashes between both conflicting sides, which would finally lead to a military coup. The historical data told us that when the political situation ran into its peaks, the markets often rebound on hope to see the end of crisis. However, for this time, it may make a difference, as even though a short-term rebound is likely once the violence ends, the markets will, however, remain at least as foreign investors may view Thailand has deviated from the democratic path and uncertainty persists over the formation of a new government under the coup leadership with possible threat of GDP or sovereign credit rating downgrades. Actually, we have a not so good experience from the new government under the coup in 2006. It seemed not perform well from the new government. So for this time, if the military coup happen again, we have some doubt on the new government, and especially with the economic situation right now compared to the economic in 2006, it seems different. As in 2006, the economic seems still in the good shape, but for now, I think we need the government to push or to have the very good measure to push the economic right now, because we are in the slowdown. So if the worst case happen, it would be quite a more impact to the economy, and the downside may be deeper than the base case. So we expect to see the downside of the market to 1260 to 1240 points. The next page shows the issue to watch in very near term. There are three things to keep a close look: the new elections, the caretaker government status, and the political protests. For the first one, the new elections, as said earlier, the election commission and the government agreed to set the new election date on July 20th, which is almost 3 months from now. So it means anything could happen during the waves. The violence from the clashings or the military coup is still in the options. We don't know. But the point is whether the new election will be successful. For the new election date, in 2006 case, the new election date was set on October 15, 2006. That it was more than 5 months after the court notifications of the elections, but there was a military coup before the elections on September 19, 2006. So that could happen this time. We don't know. So just keep a close watch on the new election. The second issue that have to keep a close monitor is very near-term events. Actually, it is today one of the related factor will happen, which is the Constitutional Court to ruling out the Twin Prince transfer case today. No doubt that the Prime Minister will file guilty along with the earlier Supreme Administrative Court's rulings. So the point is, would it be individual guilties or the whole cabinet have to be responsible for the charge? If the whole cabinet have to be responsible for all the things, it's come to the question that which cabinet to be dismissed, the current cabinet member or the cabinet member in 2011. That would make a difference. If the cabinet member in 2011 have to be dismissed, it could be neutral to the market, as there have some of the current cabinet member who free from the charge. So it means that the new new caretaker prime minister could be re-elected from the current member. But if the whole current cabinet member gone, it will lead to a political vacuum, and for sure the legislators who disagree with the court ruling will come out and maybe have some violence happen. That would be come to the worst case as mentioned earlier. The second issue related to the caretaker government status would be the NACC case on the rice pledging schemes. Actually, they expect to make a decision on tomorrow, or the latest is May 15th. So if the NACC decide to indict caretakers Prime Minister Yingluck Shinawatra for alleges the election of duties in the rice pledging scheme, it will later forward to the case to the Senate for possible impeachments to remove her from office. It would require the vote of 3/5 of the senators. That may take time, but still leads to Yingluck and the government status. So it's not easy to end the situation soon. The best case would be the situation prolonged and market trap into the sideways that we hope to we think that would be the most likely case. The last issue is about the political protest. The anti-government PDRC and the pro-government UDCC, they both are setting for the mass rally after the Constitutional Court's verdict. And so that they still have some leaks for any violence to happen during the waves. So just keep a close watch on that move, especially today after the Constitutional Court verdicts. Let's move to see the performance of the Thai stock markets. For historical data show that May was traditionally a weak month for Thai stock. But don't be panicked. The prolonged political situation would drive the market in sideways mode, while the foreign fund flow and the earnings season could help to support the downside. So it would be worth to find a trading opportunity amid the crisis right now. So let's find a chance in the foreign fund flow movement. From the chart, we can see from the upper left hand side chart that the foreign heavily sold off since the mid of 2013, but it shows sign of nascent returns since March 2014. Despite a heavy sell of foreign investor, however, play a bigger role on the Thai stock market, while the role of retail investor got diminishing from 66% to 52% as shown in the lower left-hand side chart, and while the foreigners shift its portion from 18% to 27%. So that leads to one of the interesting themes about to bet on a return of foreign fund flow. It is best to look for fundamentally strong blue chip with no or little bout of buyback after recent overdone foreign sell-off. Let's see the chart. The chart is show the percentage change in the foreign holding, including NVDR from the peak to low and from the low to current levels. So the interesting counters in the circle, in the red circle, is the group of shares those has faced with the heavy sell-off from foreigners, while not yet much buying back on the recent returning of foreign fund flow since March. So after we compare those interesting share with the fundamental factor like PE, price to book value, dividend yields, return on equities, or even the upside gains, Here we come to the attractive list as shown in the tables. So we pick Thai Tap Water and Samat Corporation as our top pick in terms of share those interesting from foreign fund flow. Another things on earning plays, we pick from the regular sector updates for the months. We like IVL and Supalai as the earning play for the first quarter earnings to come. Then I will transfer to Kun Danai to give you more detail on each stock picks.
Hi everybody. On our stock picks relating to the earning play, we have 4 stocks which are expected to report a very good earnings in the first quarter. The first one is the Supalai. Actually, in the first quarter of this year, the housing market is quite sluggish. We see the buyer confidence declining along with the political factors and also the slow economic growth. In our statistic, our survey of the 8 largest developers listed in the market, we see the condominium booking hard hit and dropped by 83% on the condominium booking or condominium pre-sale. Also, the take-up rate on the new project launch dropped to 31% from 42% in the first quarter of 2013. For the housing booking, we see a very good booking momentum on the housing booking. This is because of the people who buy the housing is not totally speculators. They are the real demand. They are the one who buy the house for the real living. We see the housing booking growth of 5 to 10% across the board. And even though the demand of the housing is slightly dropped, but we see the lower new supply due to the mid to small developer has been has dropped their development plan this year. So we see the new supply is declining. But the growth of this year is quite difficult. However, we see the Supalai stood out as the best growth in the sector with the very highly earnings visibilities. Its backlog as of the first quarter of 2014 is already reached 17 billion. If you compare with the last year transfer is 12 billions, you can see Supalai is already secure growth this year already. But we can see they can sell the house. They can deliver the booking house in the first quarter 1.6 billion. And we see the momentum of the housing booking momentum is low on. And so we can expect the housing booking for the second quarter of this year to fourth quarter of this year altogether will be 5 billion. And all of which will be transferred this year 2 billion. And 2 billion will add on to our backlog. And this year transfer will be 21 billion or up 60%. Given the softened margin to cope with the high labor costs incurred last year, we see the profit growth end up 48%. In the same time, we see the first quarter due to a very huge backlog on hand. So they got a good top line growth in the first quarter as well. We see the top line growth in the first quarter, 60% growth, and also in the bottom line will grow 53%. With a very secure growth and very good first quarter earnings, the stock is still trading just 8 times earnings, lower than the average PE in the past. And also they offer 5% dividend yield. We still like the Supalai as the growth remain intact and the valuation is quite undemanding. We reiterate the buy rating with the fair value 25.14. The next one is the IVL Indorama Venture. Is a holding company invested in the company operating in the integrated petrochemical value chain, both domestically and internationally, across the 4 continents of the Asia, Africa, North Africa, and Europe. During the first quarters, after the concern about the outlook of the PET price, caused the buyer to delay purchase and reduce inventory level in the fourth quarter of last year. During the first quarter, it happened to be the restocking activity just happened, and the demand growth, especially in Asia, and short-term supply shortage in Europe, prompting some import from Asia also contributed to a rise in the PET spread. The PET spread in Asia and Europe, North Africa is increased by $46 per ton and $31 per ton to $229 per ton and $297 per ton respectively. The polyester spread also improved on the back of the demand growth. In the first quarter, polyester spread in Asia jumped by $57 per ton to $241 per ton. In the feedstock business, the PTA spread in Asia rose by $14 per ton from the very low point in the fourth quarter to $86 per ton in the first quarter. PTA spread in Europe held steady in the at $212 per ton. However, the PTA spread level in Asia and European market remain at a comparatively low level compared to the 5 years trailing average. This is because of the supply surplus. MEG spread narrowed by $71 per ton to $425 per ton due as a result of the higher feedstock prices and still high level of inventory in China. All in all, when we look at the sale volume wise, we see the output is up by 2% Q on Q. Most of the increase is largely due to from the seasonal factor in the fourth quarter, while the production volume of the PET business is quite low in the fourth quarter. Because of this, we see the IVL will return to profit of $448 million in the first quarter from a loss of the $469 million in the fourth quarters. The outlook remains favorable for the IVL in the second quarter as the impact from a drop in the PET spread back to normal level as a result of the new supply in Europe scheduled to come on to the market will be cushioned by the sale volume growth driven by the full quarter production of the polyester CP4 and the upside from the PHP fibers GmbH, and also the acquisition of the Turkish polyester producer Sasa Polyester is also expected to be complete in the second quarter of 2014. We value the share price at the 26.9, 26.3 based on the 2 times price per book. Okay, the next one, we change a little bit to the telecommunication sector, and the Samad Corporation business is mostly in the mobile multimedia, ICT solution and services, and technology related business. And we expect Samad is to report the first quarter profit 390 million baht, up 7% Q on Q. This is because of the smartphone sale at its mobile handset distribution arm will push the average selling price higher to 2,926 baht per unit from the 2,515 baht per unit. And also the mobile handset sales are expected to rise from the 9,000 units in the first quarter of last year to 1 million units in the first quarter of this year. And the second one, the revenue at its system integration subsidiaries, Samtel, will continue to keep rising thanks to its plan to bid for more of the new project. And the backlog at the start of the year 2014 is 7.9 billion, of which 4 billion will be booked this year. Thirdly, the Samad will see its revenue rise on the better performance from the Samad Engineering Comfort, Vision, and one-on-one contact. Will see its revenue rise 9% Q on Q after expansion into Cambodia and the growing customer growth. On the full year basis, we expect Samad to achieve the earnings for 2014 at 1.6 billion, up 13% year on year. The key earning driver will be the likely increase in margin from the iMobile handset distribution arm on the increased proportion of the high margins smartphone sales. The second one is the prospect of the rising revenue from Samad affiliate in the second half of this year, largely boosted by the growing sale of the digital TV set-top boxes. Third one, we turn to the utility sector, and the stock is the TTW is engaged in the production and distribution of the tap waters under concession from the provincial water work authorities, and we expect TTW is to report the first quarter revenue growth of 5.8% year on year, driven largely by the positive effects of the water tariff increases to the tap water sale volume, is up around 2.3%. Beside the top line growth, the tax break for the post-flood reconstruction investment as part of the BOI tax relief measure would lead the TTW to post the 30% rise in the pre-exceptional profit in the first quarter of this year. But however, on the net profit basis, TTW is expected to report 18% drop in the net profits. This is due to there was a special item, is a gain of the 325 million tax refund at the subsidiary in the first quarter of last year. That would make the earning base for the last quarter of last year a little bit higher. The outlook remained brighter for the TTW in the second quarter of this year. The pace of growth in the tap water sales volume looks set to accelerate in the second quarter among the extremely hot waters and the recovery of the seafood export in Samut Sakhon province. Despite the full utilization of PTW, its subsidiaries, there is remain room for the growth of the BLDC and TTW. BLDC should benefit the startup the Bang Pa-in cogeneration power plant, which is owned by the CKP subsidiary. This means when the power plant is start up, they will use more waters, and the Thai Tep will reap the benefit of this one. And we are expect Thai Tep is to pay out the very good dividend for the full year of 2014. Current yield is around 6%, and the stock is is still undervalued. We value the stock at the 13 baht a share. These are the 4 stock we picked this month based on the earning view. Is you have any question regarding our presentation? Please type the question.